There's not as many homes out there to house everybody. And parks are that bridge between affordability there. And I believe that it's only going to grow in demand as time goes. And I see that prices are going to continue to go up. A lot of people are just still working to try to make those ends meet. And where in the country do you see mobile home lot rents go for $180 a lot? And that I was in working on some deals out in the Carolinas. So nowhere do I see that.
Good morning, and great morning, guys. Welcome to another fabulous episode of Exit Strategies Radio Show. Hey, I'm your host, Colin J. Mutt, broker and owner of Exit Realty Low Country Group and beautiful of Charleston, South Carolina. Hey, there's time listening to this show. You know what it is. It's going to be a great time. That's for one. But number two, our mission here is very simple: to empower our community through financial literacy and real estate education, God's legacy building. That is what we do. So I'm going to start off by doing something a little bit different today. It's working on I don't want to label it a transition, but I will call it one today, because I want to kind of plant the seed for this next level or next section of the journey. You all know that our show here is based upon that book of Exodus and how we move people from one place to another. And we have been striving to do that with this show for the duration since we've been on air, which has now been several years. I'm always humbled by that. But I'm going to start with a question today for you that are tuned in, who got your ears, quote unquote, to the dial, if you will. Could investing in mobile home parks today fund your kids' college as well as your retirement? Now, today, we are very humbled and honored to have two amazing gentlemen in the field of manufactured housing, mobile modulars, mobile home parts, all that stuff, who are here, and they're going to drop a significant amount of nuggets on you. And I am super, super duper excited. So first we have with us Bobby Wymbs. Bobby is with Matthews Real Estate. He is a guru and expert legislatively in manufactured housing and applications. We have with us Arthur Varela, and Arthur also is with Matthews Real Estate, and he is the guy that knows how to put that deal together. And I'm super duper excited to have the gentleman with us today. So Bobby, Arthur, how you guys doing?
Doing well. Thank you for asking.
Doing great.
If you don't mind, gentlemen, high level overview. Let's get started. And Bobby, I'm gonna start with you. High level overview, who you are, what you do, and let's go from there.
Bobby. Yeah, I'm Bobby with Matthews. Arthur and I came over here about 3 years ago to Matthews to start the mobile home park division. And it's been a lot of fun, very interesting, fallen in love with the space. It's a very deep and interesting space that's taken storm over the last handful of years. It's very interesting in the fact that it's something that a lot of the country needs in affordable housing. It's a good investment. And, we kind of just hit the ground running. And I came over here from working in wealth management. I had a friend who was working at Matthews Real Estate, working the industrial side of things. And he'd always tell me, you need to be over here with us. You're an outgoing, personal person, and I think you thrive over here. And I wasn't necessarily loving my job before, so thought it was a good time to switch over, and very happy with the decision I made.
So Arthur, and yourself?
Yeah, like Bobby said, we came to Matthews around 3 years ago. Ultimately, or I guess more so myself, born and raised here in Southern California in Orange County. Always loved playing different types of sports. Baseball, basketball, football were my top three. Went to school, UC Santa Barbara, studied economics there. After school, took some time to ponder on what I really wanted to do. I always knew real estate was very interesting, very lucrative. A lot of people speak very highly of it, especially more long-term people that have that outlook. Started here at Matthews, and if you do some research on Matthews, ultimately you're going to know it's more of a retail-focused firm. But ultimately, we wanted to make a splash, start something different, and out of everything we chose, it was mobile home parks. So that's where we're at.
So Bobby, my notes tell me that you are a leader, national expert in these types of transactions as far as manufactured homes, manufactured home parts. And you recently authored a piece. So before we get that far into it, let me kind of throw this out to you, gentlemen. Manufactured housing is the original affordable housing. I mean, the government created these standards, these guidelines a number of years ago. If you don't mind, give us your take. And Arthur, I'm going to come back around to you on this to begin with. But give us your take on what does that mean and where's the opportunity for consumers as it relates to manufactured housing?
Yeah, I mean, on the affordability side of things, as an investor in mobile home parks, there's a couple of things I would say you got to look out for, or what you got to do your research on before going into. I mainly and mostly focus in California mobile home parks, and it's a state right now where there's a lot of people either stopping or putting a hold on buying more parks in the state for political or economic reasons, and looking to go into Western states that are still on the Western side, but a little bit east, maybe Arizona, Nevada, just because of tenant favorable laws and rent control. That's one thing that will make or break a deal. What's the rent control in the area? And that's something that is different from city to city, even if it's in the same county, right? So there's a lot of things that, and a lot of nuances. Is it on city services? Is it on septic? What condition are those in? So there's a lot of nuances that go into it rather than kind of just jumping in blindly, getting a mobile home park and hoping that you'll make money, right? So there's ways to go about it to be more safe, knowing what types of parks you're getting into. If it's city services and all tenant-owned homes, then it's probably going to be a little bit easier a journey than if you're getting into a park that's rent controlled, has septic and that's not in great condition, and all park-owned homes with a higher risk. So there's a lot of factors that go into it.
Let's take a short break.
You found the perfect property. You got the vision. Now you need the capital. At Melifund Capital, we specialize in funding real estate deals for investors who want to build, flip, or hold and don't have the time to chase after banks. Whether it's new construction, a fix and flip, or long-term rental, we offer simple terms, fast approvals, and access to private capital. We even work with manufactured housing projects because we know what it takes to build value from the ground up. Simple. You bring the deal, we bring the money. Visit melifundcapital.com or call 843-619-7038 to get pre-qualified today. Melifund Capital, we fund what you build. If you put this up against, well, matter of fact, let's not put it against, let's just say it. And Arthur, I'm going to come to you on this. Why is this type of housing, this type of investment outpacing, or is it outpacing multifamily in your opinion?
In my humble opinion, I believe so. Ultimately, I mean, you see all the headlines all over the place. I mean, housing's becoming more unaffordable every day. And I believe, and I think Bobby as well believes, that mobile home parks are that last wall of defense against affordable, or per se for affordable housing. I mean, just being here in California, you're seeing the home prices. Never thought, I mean, at this point in time we'd be here, and then you go to certain other markets, say where you're at, Corwin, in South Carolina. I was working on a deal out in Sumter. And then when I was working on that deal, a lot of these people would ask me certain criteria, like Bobby was going into. Hey, what's the infrastructure look like? How many homes does the landlord own? The local municipalities, kind of what are the laws out there? So it differs from state to state, but ultimately, I mean, everyone needs a roof over their head. And this is that last resort, per se.
You working with and work with investors who invest in these types of assets, this particular asset class. So for someone who's maybe thinking about it, I mean, people just have a negative connotation about manufactured housing. Let's be real. What do you say to them? How do you get them to understand that this asset class is a viable product?
To me, I mean, the numbers speak for themselves. I mean, ultimately, you got to do your research on the market and what it'll bear, but it comes down to supply and demand. There's not as many homes out there to house everybody, and parks are that bridge between affordability there. And I believe that it's only going to grow in demand as time goes. And I see that prices are going to continue to go up. A lot of people are just still working to try to make those ends meet. And where in the country do you see mobile home lot rents go for $180 a lot? And that I was in working on some deals out in the Carolinas. So I don't, nowhere do I see that.
Yeah, it's almost unreal. So, Bobby, you're into the regulation piece of it. That's what I understand to be your arena. So give us kind of an entry, I guess, high level view of what that means and what should a consumer be mindful of as relates to regulation. Because obviously, and just the wrong regulation or too much regulation can impact negatively profitability. So let's talk about that.
Yeah, I mean, before I get into that, I wanted to also add in what Arthur said. You were talking about give your 2 cents as to why mobile home parks are a good investment. I see a lot more institutionalized groups getting into the space over the last 5 years. Coincidentally enough, I've heard it compared to self-storage back in the early 2000s, where back then, it was not a very popular investment. It definitely was, but it's become more and more over time. And a lot of those same groups that were getting into self-storage kind of earlier now getting into mobile home parks, making their branch, making it diversify a little bit. So you see more institutionalized people who were on the wave for self-storage also getting into mobile home parks as a sector. So, and that's kind of my 2 cents as to confirmation that it's something that some people should think about getting into if they're looking to diverse their assets or even just get their foot in the game. But as far as the regulations, I think it's more so here in California, maybe some other states as well, but there's a lot of states out there where you don't have to think as much about it, although you always have to think a lot about it when you're dealing with states or cities or counties. But as far as California, what I went into was the rent control and eviction laws. And I guess instead of going into depth about what they are, I can give you an example. Here in Los Angeles, we were working on 2 parks, both about the same unit count, same tenant-owned homes, both on city services. And one of them was in a city in Los Angeles or neighborhood that doesn't really have rent control as much as the other parts of the county do, right? So they were able to raise rents 6 to 8% a year. We're under rent, other market rents. So there's a lot of upside there. And we're getting offers between 125 to 135 a unit in the 4.5 to 5% cap rate range. And then maybe a mile and a half down the road in a different city, they weren't able to raise rents for 4 years because of the COVID when they stopped allowing rental increases. And even when they started again, it's anywhere from 2.5 to 3.5%, right? And we're getting offers in the 6 to 7% cap rate range and about a 70 to 80,000 per unit. So that's a big delta there. And that's why I bring up you got to really know what the laws and regulations are, because when it comes time to sell, it could be that $50,000 difference. And yeah, you're going to be paying a premium for it when you get it up front, but you got to look at the upside. Where are the market rents? How are you going to be able to get there? How long will it take you to get there? And just be aware of going into the deal in the first place.
So you guys have expanded outside of your immediate locale, actually out of your immediate state. Is that because, as we say on this, the regulation and obviously profitability, is that a reason why that you guys are exploring beyond where you currently are? Because you're seeking out opportunities that would help with profitability for yourselves, for your investors, versus the regulations that may be hindering that?
Initially, primarily focused in California. We worked on deals in Arizona, Nevada, North Dakota, kind of states here and there. And that's mainly through just relationships that we've made with owners who may have parks in those other states as well. Or just for us wanting to, a good amount have wanted to sell some of their parks in California and get into other states. And we thought if we can dig up deals over there, make relationships in other states, we'll be able to 1031 them into a park in the state that they're looking for, maybe in a better deal that's off market. So just being able to create that value for them, saying, hey, we have some parks over here in the state you're looking at, rather than just going on CrackC, finding a deal that's been on there for 400 days that everyone and their mother has seen online. So I'm just creating value and just through relationships.
And I guess to build off that too, I mean, Matthews, we're expanding like crazy. I mean, it's better to have boots on the ground in whatever region you're focused on than, hey, I'm calling from all across the country. I mean, you want to go out and see the dirt. Being there in person's a whole lot different than the Google Street View, to say the least.
That's fair. That's fair. So what I'm hearing is, as you guys are building, if that makes sense, what I'm hearing is that you're seeing how to maneuver and you're helping your investors to maneuver in a fashion that helping them to navigate. I always talk sometimes in real estate that we're Sherpas. We know our way up the mountain, so to speak. So we lead people and tell them step here and don't step here and so forth. And as you guys have been working and essentially building this system, you've learned where to traverse and where not to, so you can guide people to profitability, if that makes any sense. So you guys this is your arena, this is your space. What is an entry, someone who is looking to get into this space, maybe to work with you guys, what would that look like as far as, initial, and then what questions, if you will, should they ask? Because those are the questions that you're going to make sure that you give them answers to, quote unquote, day one.
When it comes to parks, I mean, ultimately, what you're going to want to know, or the basics, is how many lots, what is the current occupancy, how many homes, if any, does the landlord own, the person who owns the land? Again, what is that lot rent? What is the home rent? What are medium home prices or homes going for in the area? What's the household income in the area? Those are a few that come to mind. And ultimately, you're going to want to know those to know, hey, I'm investing in a solid market that I know will be here for future generations. There are some gray areas to where, hey, someone would look maybe in a more rural area, more an area that kind of doesn't have much going on. If they have adjacent property close by, they maybe would consider that. But for somebody new getting into the space, those would be the basic fundamental questions you ask. And then it gets more nuanced from there.
Okay. And Bobby, your take on it?
Yeah, I mean, I think everything that Arthur kind of suggested is what we highlight when we're selling a deal to a potential buyer, someone getting into the space, right? And then also just understanding what the upsides are, building on top of what Arthur said. What is the upside value here? Is there a good amount of park-owned homes where there's a lot of people looking for their own homes that they can buy from the park and then live in the park after that? So can you make some quick cash in a rent-controlled market by selling those homes off and make them into tenant-owned homes? Is it kind of a lower strict rent control market where they might be $200 under market rent, where you have some upside to kind of make that 5 cap that you buy into a 7 cap over 2, 3, 5 years, whatever it may be? So looking at the statistics, like Arthur said, how many homes, what services is it on? Is there room for expansion? But also just looking into the upside potential outside of the facts, then also looking into the risks. What are some things that can come up that may decrease the value of my investment, make it tougher on me to operate, things like that.
Okay.
And also one other note too is financing. I think in mobile home parks, ultimately, a lot of these first-time buyers, you're going to need some sort of debt. And specifically with mobile home parks, I bet you probably see it in some other products as well, but been seeing pretty commonly a lot of sellers holding a note or doing some sort of seller financing to get the deal across the finish line. Ultimately, given the times we're in today, financing doesn't seem very favorable. So, hey, what other ways can we get around it? And a lot of these sellers, they've owned the park for multiple generations and they don't own or have much debt on it. So it makes sense for them as well. And ultimately would also lessen their tax bill after all said and done as well, if you were to go that route compared to the traditional route to where, they got to find somewhere to place that equity and go about jumping through some more hoops that way.
So creative sometimes wins in these situations is what I just heard, Arthur. So thank you for that injection, because I did have that as a potential question. You guys do a lot of these as 1031, tax deferred exchanges. How difficult is it? Let's say someone is transitioning out of a small apartment building and decide, okay, look, this is where I want to go to. How difficult is that to manage as a 1031? Or are there any more challenges than if it was going to a larger apartment building?
So you're saying if they sold their apartment and bought a park, is what you're saying?
Yeah.
I'd say they're pretty similar, but it just depends on, obviously may deal with a different type of tenant base. Those people, hey, they're rubbing, it's hard for them sometimes to rub 2 pennies together, and got to show some empathy towards that. A lot of these institutional buyers per se, you hear buy the park and raise rents 100% or jump rents like crazy. And you have to see it from the tenant's perspective as well. But ultimately the similarity would be, hey, it's multifamily, I own units, so on and so forth. The difference would be the type of tenants you'd attract. And also as well, I would say that mobile home parks are a bit more stickier than apartments in regards to occupancy. A lot of people, if you were to stay in a park, they typically stay longer than they do in apartments.
Makes sense. Bobby, any additional insight on any of that?
Yeah, I mean, as far as going from an apartment building into mobile home parks, it is the most similar asset type. So there is going to be some familiarity there, but I won't say it's like, it's not a direct switch where you're going to be on top of everything, know every problem that's going to be coming your way and how to solve it, right? There is going to be some nuances, a lot of differences, but it is the most similar. As far as coming from other product types, if you're coming over from triple net, right, the biggest difference is going to be getting your hands more dirty, a lot of more day to day. You're not just going to be going to the online to see if your Fortune 500 company sent your check on the first of every month. So just got to know what you're getting yourself into. A lot more hands-on, a lot more management on a day-to-day level. Even if you have a management property or management company in place, you're still going to have to make sure a lot more often if you're coming from triple net that everything's going smoothly.
So gentlemen, this is probably a great place to make sure we plug your contact in. Starting with you, Arthur, where can people get in contact? Well, matter of fact, either one of you. So I imagine they can, if they get one, they get technically both of you. Where can people reach out to you if they have any questions about what they may have heard or what they didn't hear here on today's show?
Yeah, feel free. Our information's on our website, Matthews with 2 T's, Matthews.com. Also, you could find us on LinkedIn. We also all of our personal numbers are on there as well on the website. And yeah, I don't know if Bobby has any others.
Yeah, no, Matthews.com. You just go to our agents. Arthur's in the Orange County office. I'm in the El Segundo office. Make it easier to find us. You can see all the listings on there as well. They'll actually be posted there about a week or two before they hit the open market. So that's where to find us.
That is awesome. Look, for our listeners, guys, y'all know me. I'm already on the website and look here. It looks awesome. So y'all please make sure y'all go check it out. Now, gentlemen, I'm going to ask you guys, I think I'm going to switch up one of the questions that we typically ask, that mic drop question, and ask you more frame a takeaway, each of you. Our show here focuses on legacy building. We want our folks to begin to create legacy for themselves, for their families, that will benefit them for generations yet to come. And with that, knowing what you know, so I got the gurus, so I got to ask, but knowing what you know, give me a takeaway for someone who is either to just started or is in initial phases, if you will, of this mindset of, okay, look, we want to create legacy and build wealth for our family. Give me a takeaway, gentlemen, each of you.
For me, I just say continue to be curious. Don't leave no stone unturned, especially in the mobile home park space. People that I speak with all the time, been in it 20, 30, 40 years. I share with them knowledge that they didn't even know about. Always to continue learning, continue evolving, and what you don't know is what I'll leave you with.
Interesting. I like that. Bobby?
Yeah, for someone coming into, I think I wish I did a little bit more in the beginning when I was starting out. Arthur and I took it head on, so we didn't have many people to lean on. So going into the space, I'd say go and get yourself in front of people who are experts in the space, whether it's a broker or if you're looking in a certain state, look up who the biggest owners are in the area and just ask questions. Some of them even have some investor kind of product types or products, whatever you want to put it, where you can invest money into their fund and you can see how it all operates that way. I know when I came to the space, there's some bigger owners in California that have helped me out understanding more in my first 6 months to 12 months, underwriting deals with them, seeing how they see deals, because as brokers, we might underwrite a little bit differently than they do. What do they see? How do they go about deals? So when you talk to those people coming into the space who own dozens of parks, you can learn a lot of knowledge from them and then jump into it yourself and build off that. So my piece of advice would be get yourself in front of the people in the room who've been there the longest or know the most about the space and kind of absorb knowledge like a sponge.
That is awesome. Well, gentlemen, I want to thank you guys for taking time out to be with us on today's show. It's been my honor to spend some time with you, to glean just a smidgen. I don't even think we scratched the surface good on what you guys know and what you guys can help people to do. So again, I want to thank you for taking time out of your schedule to be on with us today.
Of course. Thanks for having us.
Thank you, Carlin.
You're welcome. So for our listeners, hey guys, look, I want to invite you guys to submit your questions to us. We're all talking about legacy building, how we can take you and your family to the next level. More importantly, set up the stairwell for you guys to continue on in the future. So for our future episodes, we'd love to hear from you. Please reach out. You can get us at radio@colwinmillette.com or you can get us at info@exitstrategiesradioshow.com. Please reach out. Please let us know your questions so we can make sure that we get the guests on show, on air, for you to get the answers. Guys, y'all know how I feel. You know what I say. You know, I always put the two of those things together. And I give it to you this way, which is to tell you that I love you. I love you. I love you. And we're going to see you guys out there.